Well, I think the basic issue is that in some respects, the supporting the economy and defeating the virus are kind of diametrically opposed. In order to minimize the virus problem, you almost have to kind of maximize an economic problem, because minimizing the virus problem requires limiting social interaction, keeping human mobility low, curating social distancing, preventing people from going to work to some extent.
Which is bad for the economy.
Exactly. So there is this sort of basic tension between the two objectives. So understanding, for example, the monetary policy response to coronavirus has to be understood in a very limited way. It's not really about creating credit demand. It's about two things, really. One is preventing asset prices from collapsing in a way that would maximize the level of panic, so kind of stabilizing confidence, and also preventing the risk of a collapse in market structure, the kind of collapse in market structure that we saw, for example, during the global financial crisis. So monetary policy has to be understood in a very kind of limited way. It's got very limited contribution to the crisis at the moment. As far as fiscal policy is concerned, the main objective is to make sure that food and medicine supplies are available, and to make sure that health infrastructure is supported to the extent possible. In China, for example, the monetary policy response that we saw 2 or 3 weeks ago, the big liquidity injection, is really mostly about stabilizing the balance sheets of debtor companies. Right. Firms that are by definition losing income need to have their debt service capacity enhanced by lowering debt service terms, and that's being supported by regulatory action on the part of the CBI, the banking and insurance regulator, to offer interest rate holidays, debt service holidays in exchange for more favorable treatment on acknowledging non-performing loans.
We've been talking about the indebtedness of China for years now, but perhaps this really might be the catalyst that the world has been waiting for. How worried should we be if this coronavirus issue lasts much longer than people are anticipating? What does that do to company cash flows? What does that do to financing levels? And does the PBOC have the ability to stem a potential shock, a credit shock in that space?
I don't think it's really so much the PBOC's issue. Thank goodness, it seems that China is getting closer to a stage where they might be able to consider delivering more proper kinds of support for the Chinese economy. I would think that support would come in the form of a kind of traditional kind of infrastructure and property stimulus that we've seen in the past, in 2009, for example, and in 2016, 2017. But the scale and the extent and the duration of that kind of stimulus, I think, will be much more limited than anything we've seen in the past.
You mentioned the trade-off between the economic pressure that a country can exert and the containment of the virus. And China, of course, has been the most draconian of any country. The biggest outbreak there would make sense. The Chinese government was really, it came under criticism for initially not reacting swiftly enough, and now obviously have taken much stronger measures there. What do you think about the domestic view within China of how President Xi has handled the crisis? Has that criticism dissipated? And what does that mean? Because stability is obviously hugely important to the Chinese government. Yes,
I think in a way the Chinese government is facing two kinds of threat. One is the sort of threat to its legitimacy if it fails to control the virus. And the other is the threat to its reputation for competence if it doesn't support the economy. As I said, it can't really meet those two threats simultaneously. It's a process that works in series. Broadly speaking, the first thing to do is to control the virus and limit the spread of panic and uncertainty. And it's only after that meaningful stimulus can be delivered.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.